Hi everyone, so just going to take a look at the main events that happened this week and then take a little look ahead to next week and the key events to look out for. So just taking a little recap of what's happened this week, and it has been pretty rate decision centric. So on Tuesday we saw the FOMC minutes for the March meeting, then on Wednesday we had the press conference from ECB's Draghi and also the ECB rate decision, and then Thursday saw the Bank of England with their rate decision and asset purchase target. So firstly, taking a look at the ECB rate decision and press conference, little was expected out of Draghi and little was actually delivered. So they kept the main refi rate on hold at 1%. And the main noteworthy comment to take away from all this was the fact that Draghi said it would be premature for the ECB to talk about an exit strategy. So that in regards to their covered bond buying programme and also their security market programme, where they have seen very little bond buying in the for government sovereign bonds in recent times and also covered bonds as well. So many starting to question whether these programmes are going to keep running. Now, looking at the FOMC minutes on Tuesday, that caused the largest market reaction of the week. So the main comment from that caused this reaction was the fact that the FOMC members said there'd be no new easing unless growth slowed, with a couple of members actually wanting a bit of additional stimulus. So this caused a market move lower in terms of fixed income markets and US equity markets, and a spike higher in terms of the dollar index as well. So quelling talk of more QE for the time being, although it will be quite interesting to see non-farm payroll number on Friday. If this is much weaker than anticipated, it could re-spark those questions around QE3 being back on the table. Now, as for the Bank of England rate decision, that was pretty non-event really. So they kept their interest rate at 0.5%, completely as expected. All analysts survey did go for that as well. And their asset purchase target, they kept that at 325 billion sterling. Again, completely as expected. And this is also because their programme, or their current programme of purchases, hasn't quite finished. It won't finish until the end of May really. But in terms of the decisions and events that took place that week, that's it really as a recap. So next we'll just take a look at what's happening next week. So in terms of key data to look out for this week, most of the focus will actually be on the Chinese GDP reading, which is due on Friday. So there has been a lot of talk in recent times about China and whether they'll have a hard landing or not, with many, including academics, saying that they may see growth in China at less than 8%. So this time round, quarter-on-quarter for Q1, the growth is expected at 1.9% in China, with the year-on-year expected at plus 8.4%. These are slightly lower than the previous readings that we've seen out of China, so we're seeing a slight slowdown if these numbers come in line. Now, the main reason for a lot of chat around whether China is having a hard landing, and many academics and analysts predicting actually a reading of below 8, this is due to the US and European situation and the economic slowdown in those areas. So a lot of analysts and a lot of data suggesting Europe back in recession this year. Now, alongside this as well, we've seen oil at pretty elevated levels in recent time. This with a lot of geopolitical tension, especially around Iran and also Syria and those Middle Eastern countries. But that'll be the main focus in terms of data. So Friday, the Chinese GDP readings for Q1. But also to look out for, we have quite a bit of US data, including CPI and PPI numbers, and of course any spillover from the non-farm payroll number, which is due out on Friday. A lot of markets will be closed, so reaction to that could start from Monday when the markets reopen. But for the time being, that's enough from me. I hope you have a very pleasant Easter weekend and don't eat too many Easter eggs. But we'll see you back on Monday. Thank you.